Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, April 5th. Mike Boutros with you on the line. Great to see you guys in the room. Good morning to everyone. Hey, Ty. So, interesting start to the week. Dollar still in the range. We talked about that yesterday, but pushing the upper bounds of that range. Now, you're not seeing that dollar strength manifested across the board, and we'll be looking at individual pairs of which are kind of taking the beat from their own drum. So on the menu for today, we'll hit DXY, Euro, dollar CAD, Aussie dollar. RBA came out last night, holding rates at 1%, but you're seeing Aussie ripping higher today through resistance. We'll take a look at that. SPX looks a bit toppy. Sterling, gold, and NDX. I got you, Ty, on SPX, got you, DXY, got you 10-year, yes. NASDAQ and crude, gold we have, and silver, I got you. All right, any other questions or trade setups, guys? As always, feel free to throw them on the message board at any point. Let's jump right in. Here's what the DXY look like into the start of the week. So the break essentially of the median line saw this thing rally higher. We were looking for resistance at that 618 retracement of the decline to see what kind of reaction we would get there. We're kind of pushing through it now. Here's the 618. I just want to show you before I jump into this chart. I'm going back and forth here. Here's the weekly, right? Biggest focus here, and the only thing that matters for the DXY for the next couple of days. It's been weeks that we're holding support at 97.70, basically 97.58 to 97.70, and resistance to the February high day close has been rock solid resistance at 99.33. We're looking for a breakout of this range. It's all within the confines of the ascent. You're running into trouble until you get through 99.33. So you can envision a scenario where you do see a little bit of a dollar drawback while we're in this range. At the end of the day, the breakout of this well-defined 5-week range will determine the next leg for DXY. The broader trade is still constructive, even if we drop down as low as 96.40s here. It's the 618 of the yearly rally. That's slope support. So even if it breaks lower, you're still in the confines of the uptrend. But right now, the focus is what we do up here. Taking a look at the daily chart, it shows a very well-defined range. Again, here is the breakout early into March. We've been holding this key range ever since the start of the month, all through last month, I would say. So sell at support, buy at support, sell at resistance. Until we break out of this range, that's the focus here. DXY on the intraday chart. Here's what the 2-hour looks like. Here's what the 4-hour looks like, zooming it out a little bit. You can see we made it through that 618. That downslope has been invalidated, right? So this downslope, we kind of scratched that. That's not in play. We've already pushed through it. At the end of the day, it's just a simple range. Now you're seeing risk today kind of take a little bit of a step back, right? You saw most major indices push higher yesterday, but we're still in dire risk, in my opinion. So we'll look at that in a moment. But for DXY, again, near-term resistance 99.33. You need to break out above 99.66 to mark the next sort of resumptive move for DXY. So nearing resistance within the broader uptrend here for dollar. As far as the economic calendar is concerned, we don't have much on tap. Later today, we do get ISM non-manufacturing PMI figures from the US. So keep that in mind at 10 o'clock. Lackluster on dollar. Wish we had more, but we'll look to see how the opening range pans out here. Moving across the way, that's number one. Number two, here is Euro. And Euro is another one where I was looking for a possibility to get on the long side, but it didn't hold. Here's Euro on the weekly charts. Same gig. You're in a major well-defined range. Here it's 111 on the upside and 108.30 on the downside. So a wider 200 some pip range here. Bearish below 111. It's the same level that we talked about last week, same level that we talked about into the start of this week. That's near-term bearish invalidation. If we get a weekly close above this level, it would suggest that a more significant low is registered here on February. So until we do, that's the key range at the bottom tail end of downtrend. Where does that take us on the daily chart? Well, for Euro, here's what it looks like on the daily. looks like we had a false break scenario here. Not only was it a false break scenario above that 111.09, you saw an outside daily reversal candle, very bearish development at the highs, turn the focus lower. Yesterday, if you guys remember, I was looking at support right here. I wanted to see if that could hold. Was on a hair trigger, ready to pull it, but it never gave me the signal. So I was never able to get it on the long side. Good thing I didn't, because we are breaking a little bit lower here. Yesterday's close, if that close was a validation of a break of that uptrend, we should still be looking lower, guys. Like 109.30 is the 618 of the rally, and I'm looking for a excuse me, a little bit higher. 109.50 is a 618 of the rally, and I'm looking for a reaction there. All right. Here is what it looks like on the intraday chart. And again, this is what I showed you guys last night. So drifting down a little bit lower, there's that 109.50 level. Not quite there just yet, but I do want to see a reaction here today. Guys, not only is this the basic fib key ratio of the advance, but it's also those lows that we marked in late March. We've seen multiple pivots along that 109.50 plane. So look for a reaction here. If it holds and it rebounds, you're still not out of the woods until weekly open resistance at 110.30. So even if this holds, that's the breakout. And an objective break of the weekly opening range highs is what would put this thing back on a resumptive path to the upside. All things held constant, you just broke near-term uptrend support, looking for a low in euro. Okay, looking for a low in euro. There's not much on the event risk front heading into the latter part of the week. You do get ECB monetary policy meeting account, but I don't think that's going to give you too much of a hit. As far as the other event risk, which I didn't mention, which is the FOMC minutes tomorrow, I don't really think you'll get that much of a push. Look, it's going to be a tell on the commentary that's going within the FOMC. It's going to be a tell on kind of where they're looking as far as the aggressive path of normalization, whether it's going to be 50 basis points or not. If we take a look, guys, at the CME watch tool, okay, just to take an idea of where the markets are, here's what the CME watch tool is telling us that markets are pricing in right now. For the May meeting, looking at only 25% chance for a 25 basis point hike, and a 75% chance for a 50 basis point hike. So the markets are beginning to price in a more aggressive path of normalization. Kick it out to December, okay? It looks like markets are still pricing in largely that will be somewhere in the range of 250 to 275. That's an aggressive hike path. That's an aggressive slow path, right, for the normalization process. So you see the dollar is reacting in kind. Now, again, we're talking about the dollar, possibly reaching an exhaustion point on this push, but for the dollar, for euro, it's a very similar scenario. Looking for exhaustion on the top side for the dollar, looking for exhaustion on the downside for euro. Any questions on euro dollar? All right. Next up on tap from last night's update was dollar CAD. Again, I explained my frustration with this in yesterday's webinar. Looking for sort of a break of the range and maybe getting it right now, and it's to the downside, which again is unfortunate because it's just been a down trade. It's been tough to get like an entry on this. Let me take it a step back. It's tough to get a stop. Even if you get an entry on the pull down, the stop is way far off. The monthly highs, the weekly highs, you're looking at like 125.40. We're already at 124.70. So we'll see how this pans out. This is dollar CAD on the weekly charts. I'm sorry, I'm going backwards on this one. But if this break is legit that we saw a few weeks back, you can see the 52-week moving average has kind of been rubber bands snapping back and forth on both sides. But one thing I did want to note, guys, is objectively, 125.50 is the objective yearly opening range lows. So what that would entail is suggesting essentially that a break of the yearly opening range would have us look for a third, fourth quarter low. And that's the implications for a break below 125.40, 124.50 on a weekly close basis. That's the implications, right? Again, objective stuff, not Mike Boutros' opinion, not Jamie's opinion, fact. So very well defined yearly opening range. If this week closes sub 24.50, big trouble here for dollar CAD. Here's what it looks like on the daily chart. Again, the lows for the year haven't been challenged yet, but we're pushing them right now. If this continues, and certainly the break looks legit at this point, but if this does continue, your levels on the downside of significance are 123.87. It's 2 equal legs off the high. 1, 2, 3. And then you got the 618 retracement of the entire advance off last year's low. The October low day close all gives you a key range between 2360 and 2387. That's critical support for the loonie. Okay, drill down even deeper. Here's what the intraday chart looks like. Again, a formation that we added, the pitchfork off the highs from December and the highs from March have us at a decent level here, rebounding off the median line. You're bearish while below the 75% parallel. Next slope level converges on that very same region, 123.72, 123.60. I don't have the 100% extension on here. Let me just add it for you. It's kind of cluttering it up, but I just want to show you, oops, not that one, where we are on this. That would put it just a little bit earlier, 23.87, sort of the top end of that range. All right, so again, here's the 2-hour chart, or 4-hour for loonie. Employment figures for Canada are on tap on Friday. Don't forget about that. We're looking for a print of 80,000. Unemployment is actually expected to downtick, guys, from 5.5 to 5.3. We'll review this again on Thursday ahead of that release, but certainly that's the biggest event risk by way of Canada for the loonie over the next few days. Questions on dollar CAD? Steady on tap. Looks like it wants to see a test of that 123.60, 123.80 zone on the downside. That's number 3. Number 4, nice little breakout here today, and that is Aussie dollar. We did see the RBA come out yesterday, holding rates last night at 1%, no change. We talked about Aussie dollar really here testing uptrend resistance, and really this was the trade that if the dollar was going to rally, I was actually looking for a possible exhaustion trade to the downside. Couldn't have been more wrong. This actually broke, and we're breaching upside resistance right now. Here's what it looks like on Aussie dollar. As I always tell you guys, I'm gonna take this out to the daily chart first. As I always tell you, a breach of uptrend resistance, oftentimes the sharpest part of the rally, and certainly we're seeing that here today. The close matters. The close matters. If we close sub 76.10, it could be an exhaustion trade. Anything northbound of this, and you're looking for a test of the 2021 Open at 76.85. That's the next level up from where we are now. Near-term support, you're going to look at the monthly and objective weekly open. The objective monthly open that gives you 24.82. That's near-term bullish inval. If we break below that, you're automatically looking for sort of that recovery for the dollar, so that breather for the rally on the Aussie before we reset higher. We're constructive Aussie. We have been since the break back here last month. But if you're not already long, I think it's a chase here. I think you're chasing here. Here's what it looks like on the intraday trade. Look for today's close. You need a stable close above 76.10. Such a scenario, again, you're looking for that rally towards 77, which is the 2021 yearly open. Questions? Oh, I'm sorry. I was misplaced. Sorry about that. Any questions on Aussie? No more Aussie data on tap this week. So from an event risk standpoint, you're going to be looking at market sentiment mostly on this one, continuing to press higher, but really a cautious break to the upside. Keeps us looking for that stretch towards 77. All right, Ty, you're going to like this one. Here's SPX, sir, and where we're trading there. It's been a pretty clear trade. I'm going to take this back to the weekly charts. I cannot believe how clear this has been. Went over this yesterday in the webinar. I'm sure you guys saw it, but certainly the outside reversal weekly close that we saw there back in March was the onset of sort of a larger rally off of uptrend support. That rally posted a doji last week at the 618 retracement of the yearly range. 45.47. I think we closed at like what was it, 45, 44, right below. So the weekly close matters. We have not cleared the 618 on a weekly close basis yet. It suggests the risk for topside exhaustion while below the yearly high week close, 46.77. So that's basically what I'm looking for in SPX, guys. I'm looking for an exhaustion high ahead of this level if we're going to kick back here in SPX, right? For a move at least towards maybe a 52-week moving average, 44.38, right? The 618 of that rally near term is 43.09. But I'm looking for a possible topside exhaustion trade here. Here's what it looks like on the daily chart. A little messy, not as clean and tidy, right? I told you guys I wasn't really a fan of where we turned last week, but here's the pullback respecting the 75% parallel. This recovery zoomed in right here has already tagged the 618 of the drop. I showed you guys this last night. Okay, and that's near-term resistance. We're holding that right now. So the focus is whether this holds into US trade today. If we break back below 45.46, I think you get the larger pullback towards slope support. One more, just a tidbit here. There's no validation on what I'm about to do right now, but if we were to move lower, okay, a basic corrective move would take you into 44.63, 2 equal legs off the high, 1, 2, 3. So that's sort of the initial, I would say, sort of thrust. If we move lower, that should be your first area of focus. By the way, this 100% extension means nothing if we break this high, right? That's completely based on that high holding. But just a picture there to show you what kind of corrective move we can expect if that resistance holds. If we break 45.90 on the upside today, you're looking for that stretch into 46.70, 46.66. It's what we were looking for on this last stretch here last week before fall turn. So you have really well-defined parameters here, Ty, okay? 45.90 is resistance. If that pops, you're looking for 46.60, 46.70. On the downside, support at 45.46. If that breaks, I think you get the corrective move, okay? So I'm not going to leave this on here right now because, again, I just don't have too much emphasis on this being a converted high per se, but just to give you a picture of what we're looking at here with SPX. Any questions on the S&P 500? All right, that's number 5. Number 6, from the previous update, I did want to cover British pound. It's a trade that's been kind of quiet for a while, but we are sitting at some pretty major levels. Here's the British pound on the daily chart. Remember that a couple of weeks ago, we rebounded with a really strong recovery off the exact 1618 extension of the decline off the yearly high. The rally faltered at a major pivot we've been looking at. This is a whole cluster of fibs, extensions, the 2020 yearly open, all near 32.70. That faltered 2 weeks ago, and we've been sitting here contracting below resistance. So the focus is on a break of this immediate range, 30, basically the 130 proper, and 132.70s. Okay, that's the critical range for sterling. Drill down deeper into the daily charts. Looks a little bit different. In that we've rebounded off of downtrend support, faltered just ahead of downtrend resistance, and ever since then, again, you've been seeing lower highs, higher lows. This is going to be a nice consolidation break, and I think if it does break out, it's going to be the move above 32, okay? That's going to be sort of your near-term breakout mode right here. It's the 2020 March high, okay? Nice little pivot zone there in price. You can see back a couple of years. So that's the level that would sort of unleash a larger recovery here in sterling. I'm neutral, guys. The monthly and even the weekly opening range is pitifully small. Here's what it looks like on the, again, the scalp chart. This is a 4-hour. I think that's what I showed you yesterday. Yeah. So really, really tight range. There's no trade here for us yet, but the focus is on if we crawl up into this region, what kind of reaction we get into the upper parallel. Again, the 618 of the drop would be like 32 proper. If we get through this range, I think you get a larger recovery in sterling, but until we do, man, this thing is just coiling. So we'll wait for further clarity on sterling. Largely, the focus, which are what I wrote about into the open of the week, was look for that recovery towards uptrend resistance. We're getting it, but it's a slow grinder. All right. So another one that's kind of on the watch list per se, moving forward. That's number 6. All right, let's jump into some of the juicy stuff here. Here is gold, number 7. I wrote a piece about this on Daily FX yesterday. I've been showing you guys this chart for some time, but looks like gold may be basing. We want to see if we're actually going to find a larger push higher here. Here's what gold is doing. Weekly chart. You could have watched this chart for the last 5 weeks and nothing would be different. After the exhaustion push that we saw here in early March, right? Failed right ahead of the record highs. We couldn't even get a close near 2034, which is the high week close. That was sort of the hallmark exhaustion. The week we saw that, we turned our focus lower towards key support at 1900, specifically 1903 into 1920 on the weekly charts. Here's what it looks like for the last 4 weeks, right? Don't take my word for anything. We've just been sitting on that critical support zone. So the question becomes, do you break below 1903 to get a larger correction? Or is this just the pullback before we make that final high and complete maybe a 5-wave pattern to the upside? That remains to be seen. But the daily charts and the week and the intraday charts are pretty darn clean, right? 1918, that's the 2021 high day close. We did that in January, okay? On a close basis from a daily standpoint, rock solid support. Again, don't take my word for anything, guys. Look at the charts. Close low, close low, close low, nowhere near push through 1918. Okay, so the focus becomes on a breakout of this range. 1959 on the upside, we've been marking that level since last month. 1918 on the downside. Okay, looking at this from an intraday chart, here's what we've been looking. And obviously the focus has been on whether this breakout that we saw last week is legit. And as I said in the webinar, if that breakout is legit, right, and we broke above, let me get you the 2-hour here, just for some consistency. If the breakout is legit, right, and we saw a breach of downtrend resistance, check it as support, former resistance, now support. If that's the deal, then this rally should extend towards 1959 again, and that's the breakout zone. We saw a little bit of a dribble here last week, but we were unable to close above it. Again, it's all about the close. Oop, wrong chart. Right, it's all about the close. 1959, that's what we did last month. So certainly the levels are well defined. I'm liking sort of finding a larger support here. If you guys recall on that report from Sunday, right before the open, the whole focus was look for a low at 1918, 1913. That's what's got to hold. We opened the week, dropped right into that level, beautiful. And here's the recovery. If we break a breach of the objective weekly opening range, again, that would be a nice long position. 1959 is going to need to be the breakout zone for gold. Anything sub 1913, wash your hands of it. Wash your hands of it. Because if we break the downside here, then this whole breakout of the downtrend would be invalidated. Okay? So that's sort of the outlook here for gold. If we see risk turnover today, okay, which is very possible, this would be possibly another tailwind here for gold to find a little bit larger recovery back towards 1959. Okay, so Ty, with regards to your question on silver, it's a very similar scenario, except silver, I think, is a larger wedge pattern that could actually give us a better breakout. Here's silver on the weekly charts. I'm sorry, I'm going over all around here, but this is my problem with silver. I shouldn't say it's a problem. This is my expectation with silver, guys. You got a basic 3-point trend line resistance off of last year's high. 1, 2, 3. Is this a break? Well, if it is, support, final, former resistance turn support could be the play here. You see at the 52-week moving average at 24, what is that, 24.30, 24.56 there, has been holding the lows on a closed basis. So I do think if the breakout here is legit and the pivot back above that moving average is legit, losses should be limited to 24.18, and you're looking for that push higher. Now, if we get deeper into price on the daily chart, right, here's your monthly open. Okay, and here's last month's swing range lows. We never saw a break of that open, that monthly open last month, which is right below 24.46, which is again the high week close, the high day close from January. So if this doesn't hold, we could get a deeper drop towards that 618, but essentially I'm looking for a low near term. Here's what it looks like on the intraday chart. Okay, the level that you're seeing here, 24 to 24.69, again, that's 100% extension off the high, very short-term correction, but it held on that drop here. You saw that a quick pivot closed back above here. Here's the weekly open. Here's your weekly opening range lows. So if this is sort of a wedge pattern consolidation, you would essentially need to see a breach above that basic trendline resistance, last week's swing highs. Let's call it 25. 25 ties, what I'd be looking at, 25.08 as the breakout. I'm not going to scratch the November high, but leave that as a soft target. It's really the 618 is going to be the big play. So I wouldn't remove that, but just be mindful. It's just a soft target there. Can I have the daily chart again? Yeah, sure. Here's the daily chart. All right, some adjustment here. Let me just update this for you. Okay, and on this one, Ty, the 50 is in between there, right? But just trying to keep the chart clean, so keep that in mind. Okay, that is silver. Not quite as sexy as gold, but certainly looking for a possible break of this wedge consolidation pattern to the downside. Does break higher. Looking for that move towards 25.80. All right, so that is gold and silver. I do want to go over the NASDAQ. Here's the NASDAQ for you, Ty, NDX. On the daily charts, let me take you all the way from the whole suite of reports here. So here's NDX on our last update, which was right here into the open of the week. But first, I want to show you the weekly chart. We broke below parallel support. We pivoted back above parallel support, turned resistance, which means now this should be support again. The 618 of the entire drop gives you 15,334. We just missed that yesterday. That's still the upper bounds, the key resistance level near term, Ty, for the NDX. The resumption of the broader uptrend isn't until 16,025. That's the objective high day, a high week close. It was a high week reversal close. It was an outside weekly reversal. I really can't stress how important 16,025 is. All right, so that's the only thing that would put us back in the resumptive path. Other than that, guys, we're still essentially in a corrective play. So 15,334 is the near-term resistance. We're looking for a reaction there. Here's what it looks like on the daily chart. Again, the breakout of downtrend resistance was well documented back here on March 18th, kept our focus higher. We noted levels at 15,000, what's that close there? 15,150, and key resistance again at 15,351. That's the 618. You can see here, not very clean on the pitchfork, so I'm not really putting too much emphasis on this, but certainly this is a critical region of resistance. Not only is that swing high that we made back here for the actual February high, but again, it's that 618. On the intraday, looks like this. Okay, so we could still get a climb towards and tap of that 15,351 level, but look for a reaction there if we get it. Look for a reaction there if we get it. Questions on NDX? Now, we can't close out the session without looking at what's been going on with yields. We've been, if you've been watching CNBC or Bloomberg or Reuters or whatever, you're going to see them continue to talk about yields and specifically talk about the 10-2 year, which again has, for all intents and purposes, inverted, okay? Here's what it looks like. Sorry about that. Okay, here's what it looks like, guys, on the 10-2-year spread. Okay, so this is just taking the 10-year minus the 2-year, and you can see once again that we've headed into inversion territory. And this is kind of what the conversation has been about, I don't know, for the last couple of weeks, right? As everyone talks about, oh my goodness, the yield curve is inverting, and that means recession. And certainly if we look back in history, here's the tech bubble, yield curve inverted. Here's the financial crisis, okay, 2006, 2007, yield curve inverted. We just dodged a recession into and ahead of COVID, and here we are yet again. As I said yesterday, guys, in the webinar, if you guys were there, this is not a timing signal. This is a conditions signal, telling you what condition the market is in, the broader sentiment that in the variation of yields here between the 10 and 2. So it's a red flag. It's not a timing thing, but it's a red flag that certainly the environment is ripe for the possibility of a larger recession. Now, that hasn't necessarily panned through. We're not getting that, obviously, in broader risk assets yet, but it is certainly a red flag. Watch the close of the week this week. If we do close in inverted territory, man, that's even more conviction on it. As yet, essentially it's just that red flag. You want to look at the Dow Jones. Here's Dow Jones. This was one of the ones that has been more isolated, right, for the downdraft that we saw last couple of weeks in stocks. So DJI found support at a sliding parallel. Again, this is a parallel of the broader dominant slope from the 2020 advance. You saw that perfect touch in that key zone of support we talked about between the 236 and the 100% extension. Here's the rally. Here's the 1618 extension. My humble opinion, you look for possible topside exhaustion right here. If this breaks out, slope is near 35,600, but really the high day close, the record high day close gives you 36,231. So the levels are ripe, but the advance is looking a bit tired here. Here's what it looks like on the intraday chart, or on the daily, excuse me. A break of resistance, checking it as support. If that's the interpretation, if this slope is correct, the rebound, a break above this high to look for resumption. I'm thinking, again, this could be a false break scenario. So just use some caution on this one. It's not as clean, I think, as Ty, as what we're looking at the SPX, and even NASDAQ for that matter. But for this one, I'm kind of putting it on the shelf right now. It's kind of a watch list. Here's what it looks like on the intraday chart. Possible slope gradient off the low here, giving us support at 34,060. That's basically your near-term bullish inval. For the advance that we're in, that's the level that would put you back on, okay, we're heading lower in stocks. The nature of the advance, the way it's accelerated and sort of faltered to major fib support, pulled back, again, still has me thinking it's not the most convincing breakout. You know what I mean? So something to keep an eye on, Ty, but don't get too wrapped up. And again, the Dow, remember, it's only 30 companies. It's not a larger representative scope of broader risk sentiment like we're seeing with the SPX 500 or even NASDAQ 100. So I tend to put a little bit less stock in Dow, but those are the levels, Ty. I hope that helps. All right, so we hit Dow 10-year. The only thing I haven't touched on is oil. Here's what the oil prices look like, guys. Let me take a step back. From a trading standpoint, here's oil on the daily chart. You saw a reversal candle, pretty strong reversal candle off of this slope. This is a 3-point touch, gives you the bump higher. The whole thing is in consolidation. Lower highs, higher lows, until this sort of breaks out. Again, it's not really a trade that I'm very interested in testing at these levels. It's a broader uptrend. Here's oil on the weekly charts, right? We broke above uptrend resistance. You saw an accelerated rally. It's exactly what you want to see. The pullback found support right ahead of former resistance, turn support. So for me, if we break these lows, you risk a dump near 88. That's the 6.8 of the yearly rally. That's the median line for the upslope we've been following for over a year, right? So it's, for me, it's all about this low. Any stock or any trades you take on the long side needs to be against that low, and that low needs to hold. Key resistance still 112.21, 114.80. We have not closed above that level. And in fact, that range caught both, literally, of the close highs. So the levels are very clear, Ty. I think momentum is waning here, even if you look at it from sort of a daily standpoint. Like, what is that? It's not really a clear signal or a very strong conviction on either side. So it's, again, one of those trades where the broader trend is higher. If the correction is over, that low should hold, and a breach above 114.80 should put us back on track. Again, intraday. Possible downslope. I think I showed you the slope in the last one. Haven't given you an update here on oil in some time, I think. Yeah, it's been a couple of weeks probably. So here's the intraday chart I've been following. It hasn't been a winner, okay? But a possible modified slope off the high here. Basically highlights, again, 107.51 as near-term resistance. That's 2014 high. You need a breakout above 121.20 to get you going again, okay? Anything below the weekly opening range lows, last week's lows, right, puts you on risk, or puts the risk, highlights the risk for a larger washout towards broader trend support. So it's not surprising, guys, if you're looking at some of these trades and you're kind of like, well, it's not really a clear conviction, it's kind of wishy-washy. That's no surprise because of where we are in time. It's the start of a new month, start of a new quarter. You get a lot of portfolio rebalancing, you got a lot of position jammering that cleared out over the last couple of days. So stay nimble, keep some powder dry as we get deeper, and we're just carving out the beginnings of the April opening range. And again, hopefully that'll give us a lot more clarity moving forward. Any other questions or trade setups you'd like to review, please feel free to throw them on the message board. Working on positioning for a long-term position trade in stocks, Ty? Is that what you're asking, in stocks? Or what's your long-term position trade? What asset are you looking for? Silver, gold, and crude. Yeah, I'm with you on that one. I'm not crazy on the silver trade, but for gold, I'm with you. Yeah. If you're looking longer term, Ty, even if gold does break down, again, just from my point, you know, even if we go as low as 1830s, it's still within the broader upslope. So I'm not sure what kind of longer horizon you're looking at. Ideally, in Mike Boutros' world with rainbows and and unicorns, this low holds. And in fact, a break above 1595 puts us back on track. This is going to be very sensitive to risk sentiment, and obviously the ongoing headlines, whether it's the war headlines, whether it's the inflation headlines. Remember one thing, Ty, that as the Fed increases or turns the dial up for normalization, okay, that's a tailwind for gold. Higher rates is always going to be a tailwind for gold because gold doesn't give you a return. There's no yield on gold. So the aspect that will put gold in a more assertive long position is, God forbid, if we have you know, a more dire turn to the war, if it gets larger, if inflation becomes more of the forefront, you know, it's a push and pull. Inflation gets this thing higher, higher rates gets this thing lower. So I'm not surprised here. You might see a lot more positioning, sideways price action movement. Remember, guys, the next FOMC rate decision until next month. So, you know, don't be surprised if we see a lot of back and forth price action, a lot of ranging price action this month. As a sentiment standpoint, or as a seasonality standpoint, you want to remember that it's not so good for the dollar heading into this month. But for gold, it's going to be all about this range break between 1918 and 1960. I will send you some long-term gold that will knock you out on the charts, much bigger than the war. Hey, feel free, Ty. I'm always down to throw charts around. You know me. All right, guys. So no other questions. We'll go ahead and wrap it up here. Again, the event risk is pretty limited. Tomorrow you do get those FOMC minutes, so may offer some further clarity on where the Fed sits, but I'm not looking for any major sort of revelations from that release. Watch the price action and watch the weekly opening range. You're getting some decent weekly opening ranges that are holding and may in fact give us just an objective bias break. You're seeing dollar CAD following through here. That looks pretty good. And we'll continue to see if the Aussie can't climb towards that 77 handle. We'll go ahead and wrap it up here. Best of luck trading, guys. Great to see you guys as always, and I will see you back here on Thursday morning to close out the rest of the week. Best of luck trading, guys. Cheers.